because it's a record high level coming in for the markets. Of course, 6-day winning streak, which has now got extended to the seventh one. What kind of any kind of resistance seems to be imaginary from here on? Now going forward, what's the next big trigger that you're looking at for the markets? B, how sustainable do you think this rally is?
So, if you look at, obviously, we are at all-time high as we speak, and it's a good time. But what we see for this calendar year so far, the two big events which has impacted the market. Obviously, first was the quarterly results which went by, and we expect them to be much better than what the street was expecting. We saw Nifty 50, in consortium saw a PAT growth of almost 17%. I think the whole trajectory of earning growth for the last 3 quarters of this financial year has been very robust, and that is what is supporting market so far. So if you look at when we are more or less done with the quarterly season, and Nifty is almost up 3.5% since then. So that is the support which market is getting after the numbers which we witnessed, and that is in spite of what we witnessed on the Fed outcome. The more about the inflation number that we saw in US, and the commentary, that possibly the rate cut in March, April is more or less out. Possibly even in the month of June, the probability is not very high, and it's more in watch and wait and watch mode as of now. So the whole market movement has happened in spite of the adverse, I would say, the risk of sentiment of the Fed side. Also, apart from what we witnessed, that the supply side issues because of this Red Sea are ongoing. And market is just keeping all of this thing at the backbencher and enjoying those things. And one more important thing is, if you look at this calendar so far, the month of January and February, we have seen that market participants, especially FIs, has been selling India. So not a very big amount, but there has been a pressure of almost close to $4 billion of outflow we have witnessed in this 1.5 month of this calendar year 2024. So in spite of all that, we are rejoicing. It's just in expectations of the earning momentum, the expectations of India's story, the expectation of strong macroeconomic indicators, and obviously the most important outcome, which is around the corner, is election. And what we understand at Fident is possibly the quantum of excitement around mid and small cap by the retail investors before election probably will continue, and we won't be surprised to see a market touching new highs, before elections, to settle the excitement or the not believe about the FOMO feeling among retail investors. So interesting times is what we understand as of now.
Sure. So if results weren't really better than what you were hoping for, we've seen still that rather market shrugging that off and rather capturing in that uptrend that we are witnessing right now. Going forward, do you expect more steam to this rally? Of course, pre-election rally is something that people have already factored in. Do you belong to the same camp? If yes, what kind of upside are you anticipating, and what are the themes essentially, or rather 3 picks that you're looking at ahead of this?
So if you look at, obviously we have very little time left for the election, and won't be very, I would say, wise to say how market much will move before the election. I think we will see the dates very soon, and possibly before the results outcome. I think it's best 3 to 3.5 months kind of a time frame. But as I said earlier, I believe because of the excitement of the retail investor, we can see market going up anywhere between 5%, 10% across the different market, broader market, as well as the large caps. We also expect, that once we saw some data from US, even this FI, intensity of selling might taper off, given the whole narrative around India, which is building up. So I think market will be strong in the coming months. But when you look at from what to invest and where to invest, there are just 2 kind of companies are left as of now. One segment of companies, in my understanding, are the businesses or the sectors where valuations are far stretched, where we believe that, the narrative or the story is so strong, and where the most of the quantum of money is flowing into. And that segment is possibly, is getting into a high risk zone. Another segment, if you look at, are businesses, which I won't say are fairly valued, but they are more than fairly valued compared to the historical trend. And possibly they are the one which will move more according to the earning expectations or according to the fundamentals of the business. So if any new investors are thinking through, they should be wary about companies which have valuations are very, very high. And not only according to their long-term track record, but also if you compare it to others. So if you look at the segment or the sectors if you speak about, say possibly FMCG is one sector. Well, I won't say that valuations are cheap, but if you look at their last track record of 3 years, 5 years, they're more or less fairly valued, right? But because of those inherent, conditions about the sector, possibly they are not the favorites of the market. Similarly, BFSI is another sector where valuations are not stretched, nowhere fair compared to the historical trend. And we saw a very good set of numbers in the last quarter and even in the quarter 2 to 3 quarters which has went by. And even the story going ahead, the narrative going ahead is pretty strong. So those will be the kind of sectors, which we believe would be more, wise to put their monies into. Pharma could be one of the sectors. Chemical sectors could be another one where we believe, obviously that the excitement is missing and we are seeing those early signs of revival happening through. IT is another one of them. So those will be some of the sectors where, we would like to park the money of investors. Last but not the least, we are not writing off PSU as a sector. We believe PSU will continue to do very well. We believe the whole policy continuity, the expenditure of government, the executions of which we are witnessing across the sphere will continue to see the interest coming into the PSU. But the risk reward is not very favorable. That's the only point we are trying to make here. So one has to be very, very selective when one invests into these kind of companies.
All right. Point when taken. Let's also chat about Zee Entertainment. That's something I think we all need to watch out for. We've seen that fair bit of traction building in after the report suggested that again, there might be a revival one could see between the merger of Sony and Zee. That's one. B, today there were reports suggesting that there's this whole accounting a hole that has been found out by the SEBI, and the amount seems to be much higher, almost 10 times higher than the initial assessment. Of course, the company is yet to respond to that, and that might fluctuate. But fair bit of volatility which has already crept into Zee Entertainment. What's your advice on Zee Entertainment and also media related companies? Something like Network 18 and TV 18 also have been doing well. Disclosures, there's of course it's the group company that we're talking about. But what do you make out of the space right now and Zee Entertainment to be precise?
Obviously this space has been the talk of the town lately. A lot of these companies have heard, or what the market has been hearing about, a lot of integrations or mergers and things like that, and which has crept in a lot of volatility into the sector. And particularly if you look at the market data like Zee, which is we believe is a great asset, has seen his share of heightened volatility because of those unfortunate events happening across the sphere. I would not like to comment specifically on any outcomes of which has an adverse impact. But one thing is for sure that a couple of months, I think this volatility will continue to remain high across the media space, including Zee. And one investor should possibly park their money when they have more visibility about the growth part, and obviously the whole dust settles around. So I will not recommend investors to jump on the wagon and try to buy this volatility and try to be a smart investor at this juncture, because a lot of part of the unknown is very high for the media space, and possibly the risk reward is something which one has to be really watchful here. So that's my comment on this particular this particular script and the sector per se.
Oh, how about the Paytm 50% share price top and the trend that we're picking up when it comes to the schemes investing into Paytm? Fair bit of recovery actually. Now investors or traders who rather think that the bottom is behind or already formed for Paytm, how can they play up this counter? That's one. Do you think that it's a good stock now after the kind of correction that we've seen? March 15th is what we're going to see the final word coming in, whether it can operate beyond that or not. That's one bit of development. The second question to this is Hindalco. A lot of pressure which is built in on Hindalco also, right? Novelis has now come up with a report suggesting that it's got to be filing in an IPO, and that's brought some solace after the kind of pressure that the capex of this downstream company had rather instead, inserted on the financial profiles of Hindalco. You think that will make the balance sheet a little more leaner for Hindalco? What's your view both on Paytm as well as Hindalco?
Hindalco was very interesting. If I remember it correctly, they bought Novelis in 2007, and almost 16, 17 years since then. And it was very surprising to see all of a sudden that the news came about Novelis filing for an IPO. I believe, if I'm not mistaken, I think this is primarily offers, and majority of this money is coming to the promoter, not much money is going to Novelis per se at the company level. But if I look at the balance sheets, Hindalco is anyway cash rich on standalone basis, close to almost 3,500 to 4,000 crore of cash that they're sitting on. And Novelis is one where they have debt of almost 37,000 crore, a kind of number. So I believe, this is possibly the promoter is excited about the way the US market and the global markets are acting upon, and possibly they believe this is a good time to liquidate their holding, and possibly this money is going to go back to the Novelis holding company. And what I can detect from here is possibly there could be that some money when it flows to Hindalco, we can see some amount of higher dividend payout or things like that. But it doesn't change things a big way. It's sentimentally positive. I believe it's better that the true valuations will be given around. I think they hold 100% of the company, so putting out some money and taking it off is not a bad idea. So I think it's sentimentally positive. I'm not really sure about whether we will see there could be a holding company discount which might creep in. So that is what we have to be watchful about. But I think at promoter level, at the entities thing level, I think this could be a positive from that perspective. So I'm not reading too much into this. If you expect me that whether one should just buy Hindalco on this announcement, possibly it doesn't add up to the story. This is one small positive which I believe the market will rejoice. Coming back to on your other questions on Paytm, I would rather limit my questions to new age businesses, and we believe at Fident that new age businesses is the area one should now focus on. We believe that a very stern message has passed on to the whole community of those promoters in this segment, that Indian investors want businesses to be profitable. They want businesses where your internal IRR, the incremental IRR is positive compared to the cost of money which is there. And we have seen majority of these companies, look at Zomato's, if you look at, when the focus on Nykaa and other companies, has been on trying to see that they get into that flavor. And I believe a lot of the interest of Indian investors will go after this, including retail investors. So we are very positive on all of these new age businesses, and we should not forget, sooner or later we will also see a rate cut happening, if not in the middle of this calendar year, possibly toward the later part of this calendar year. That will also help a lot of this, valuation re-rating theme for these businesses to play out. Specifically on Paytm, obviously this is a tussle between the regulator and the company, and it will not be wise to say how the tide will turn. But on valuations, things are very, very attractive, but one has to be very careful about, because if I see historically, whenever there has been tussle with the regulator, things have normally taken longer for it to settle. So for conservative investors, for investors who value risk and reward, I would say there are a lot of many other options in the new age businesses, as we were speaking about, where there is value, and we believe the earning potential is huge going ahead.
All right, sir, we're just going to leave it at that. And thank you so much for taking out the time and having this conversation.